Welcome to The Explainer. Today, we're jumping into a really fascinating academic paper that basically uncovers a hidden signal in the market. Think of it like a secret clue that might just tell us where a stock is headed next. This is really the million-dollar question, isn't it? Is there a way to know what the smart money is thinking before everyone else does? Well, a group of researchers think they've actually found a way to follow their trail. Okay, let's dive right in. All right, first up, hunting for market clues. See, the core idea here is pretty simple. The really sophisticated, informed traders, the ones who do their homework, they leave behind a trail of breadcrumbs when they make their moves. Our mission today is to follow that trail. Now, you might think these big players just buy and sell stock directly, right? But that's not always the case. When they have some really valuable information, they often go to a different, more specialized market to place their bets. And that brings us to our next section, the options market puzzle. And this is where it gets interesting. You can think of the options market as the scene of the crime we need to investigate. So what makes this the preferred playground for these informed traders? Well, there are a few really key motives here. First, options give you way higher leverage. That means you can control a huge amount of stock with a pretty small investment. It's a bigger bang for your buck. Second, it's easier to mask what you're doing. Big orders just don't stick out as much. And third, it lets you get around certain restrictions, like those on short selling if you think a stock is going to tank. So you can see why it's such a hot spot for this kind of informed activity. Okay, on to section 3, a signal lacking direction. Now, for years, researchers have known that all this options activity was important. They even developed a signal to track it. But as we're about to see, this first clue was promising. But ultimately, well, let's just say it was deeply flawed. So this signal is called the option-to-stock volume ratio, or just the OS ratio for short. And it's a really simple comparison. It's just looking at how much trading is happening in a company's options versus its actual stock. So it tells us that something is happening, but it doesn't tell us what. So just imagine this. You see a huge spike in a company's OS ratio. The options market is just buzzing with activity, and your first thought is probably, this is it, something big is about to happen. But here's the puzzle. Is the news good or is it bad? See, that high volume could mean investors are betting the stock is going to soar, so they're buying call options. Or it could mean they're betting it's going to crash, so they're buying put options. The OS ratio by itself is just a scrambled message. It mixes all the bullish and bearish bets together into one really confusing number. And this brings us to the breakthrough moment in the paper. We're on to section 4, cracking the volume code. The researchers realized they needed a way to unscramble this message, and they found a pretty ingenious way to decode the signal. They figured out that the secret wasn't just looking at how much people were trading. No, the key was figuring out the direction of that trading. Was the pressure from buyers pushing prices up, or was it from sellers pushing them down? And their method is actually elegantly simple. First, they just watched the daily price of each option contract. Second, and this is the clever part, they use that price change to sign the day's total volume. If the price went up, they assumed the pressure was from buyers, so they marked the volume as positive or bullish. If the price went down, they marked it negative. And finally, they just separated all the call option volume from the put option volume to create two totally brand new signals. And here they are. These are our two decoded messages. You have OC/S, the signed call option to stock ratio, which measures bullish or positive activity. And then you have OP/S, the signed put option to stock ratio, which measures bearish or negative activity. So we've cracked the code. We have these two new refined signals. But what do they actually tell us about the future? This is the real payoff. Let's look at what the signal predicts. And what they found was incredibly clear. A high OC/S ratio, meaning tons of upward pressure on call options, was strongly associated with good news about the company's future profits and, you guessed it, positive stock returns. And on the flip side, a high OP/S ratio predicted bad news and negative returns. The signal was no longer ambiguous at all. This quote from the paper just explains it perfectly. It's saying that the reason the original OS ratio failed is because the bullish signal from the calls and the bearish signal from the puts were basically at war with each other. They were just canceling each other out, which made the total number completely meaningless for prediction. This is exactly why you have to separate them to see the real story. So we have a signal that can predict future returns. But that's not the end of the story. The final piece of the puzzle is understanding why this happens in the first place. So let's talk about why the signal works. And the answer lies in this concept called investor underreaction. See, in a perfect world, any new information about a company would be instantly reflected in its stock price. But in reality, the market is often slow to catch on. The stock price incorporates news gradually, not all at once. And that delay? That's exactly what informed options traders are capitalizing on. They use the options market to get ahead of the curve, placing their bets on good or bad news before the slower-moving stock market has fully absorbed the information. So our signals, OC/S and OP/S, they're simply capturing their footprints. So what should you really take away from all this? Well, first, it's not about how much option trading is happening, but what kind. Second, a spike in that bullish OC/S volume tends to predict good things for the stock, and a spike in the bearish OP/S volume predicts the opposite. And this whole thing works because informed traders are basically taking advantage of the stock market's own sluggishness. And here's the whole journey in a nutshell. We started with this noisy, unclear clue, the total OS ratio, which told us next to nothing. By decoding it, we ended up with two really powerful opposing signals, OC/S, which points up, and OP/S, which points down. It's a fantastic journey from a scrambled message to a clear prediction. And that leaves us with a final thought. This paper uncovered one powerful pattern that was basically hidden in plain sight, using publicly available data. So it really makes you wonder, what other secret signals and market inefficiencies are still out there, just waiting for someone to crack the code?